Welcome to the Capital News. I am your host, Alex Karitis. Today is Friday, April 24th, 2020. Thank you so much for joining me. The title of today's podcast is Nationalization and Negative Rates. We have both. We have both. They are here. They are front and center. They are in your face. Don't let them call it something else. Don't let them call it bailouts. Don't let them call it stimulus, because that's what they're calling it. They're not going to call it bailouts, but if they do, don't buy it. It's much more sinister than that. We know they're bailing them out. It's not stimulative in nature at all. This is nationalization. This is what is taking place right under our noses. The financial coup d'etat that it is. Nobody's saying a thing. No pushback from Congress that is doing anything to stop it. It's a little bit of a wrestling match. You make your points, they make theirs, but guess what? It gets passed and it gets signed, and now we have to deal with it. Because the nationalization that is now front and center is from the Treasury Secretary, Steven Mnuchin, backed up by the President of the United States himself, looking to, quote-unquote, assist the energy sector, given the prices. And if they assist them, they're going to want some equity. Well, that's called nationalization, ladies and gentlemen. Now, you can say, well, you know, if we, of course, we the people through the government, if we're going to assist you, well, we might as well get something out of it. This is a very dangerous, slippery slope. This is not what the United States was founded for or on. These are not our principles. This is not how this is supposed to work. The Congress does not have the power or authority granted to it by the Constitution to do what they have been doing. We cannot do this. We cannot bail out. We cannot stimulate. We cannot do what we are doing. Government has the ability, has the authority to go out and borrow money, but it doesn't have the authority to go out and lend money or to take ownership stakes in corporations. That's not how this works. There's a word for that. It's not free market capitalism. It's fascism. That's what it is. Front and center, right in your face. Again, this is not any longer pay no attention to the man behind the curtain. The curtain's gone. They are telling you right in front of you, and nobody cares. Why? Because you're getting your $1,200, your sit down and shut up money. And nobody cares. You're going to care, and you're going to care for a number of reasons after the fact, of course, because that's how people are. It's after the fact. It's not proactive. It's reactive. We've done those presentations. We've done those podcasts. Free was never so expensive. Setting the stage for inflation. Discussions centered around the possibility and probably the likelihood of hyperinflation over the coming years, which means the collapse of the U.S. dollar, perhaps losing its global reserve status. And if the powers that be want to maintain its status as the global reserve currency, to maintain the petrodollar system, well, that's most likely going to mean some sort of conflict, if not outright war, in the coming years. I hope I'm wrong about that. But that's what history tells us, and that's what I am using as my guide. I'm also using a lot of logic and common sense to connect the dots as to what's taking place right now. Not good. Nobody gives a damn. Buy them all up. Of course, the government doesn't have the money to do it. Uncle Sam's is broke as a joke, which of course is laughable because we've been talking about now how the states are lining up for bailouts because they're broke, and their solution is to go to a federal government that is broke. You can't write this. There aren't enough creative minds in Hollywood to come up with this stuff. This is garbage. But that's what they're doing. And of course, the federal government, we don't care if we don't have the money. We'll go to the Federal Reserve, and the Federal Reserve is going to be more than happy to print the dough. And if you don't believe that, you can go on the Federal Reserve's website, or you can go to thecapitalnews.com, and you can check out our video presentations where we show you the Federal Reserve's balance sheet, how it is off the charts, printing money like it's going out of style, because it is. $2 trillion printed out of thin air over the past month. couple $100 billion added this week alone. On an annualized basis, that would take you to $10 trillion. $10 trillion on an annualized basis if they keep this pace up, which would take the Federal Reserve's balance sheet to $14 trillion, which would represent about 70% of U.S. GDP. Nobody is buying Uncle Sam's debt because nobody wants it because it's junk. That's why even analysis from Goldman Sachs, of all places, is saying that the Federal Reserve is going to purchase about 60 to 70%. Wrap your head around this. 60 to 70% of Uncle Sam's new debt issuance. 60 to 70%. Nobody wants it. And can you blame them? This is what happens when you turn your country into a banana republic. And we're not alone. That's the saddest thing of all. Europe's doing it. China's doing it. Japan's doing it. Australia, New Zealand, Canada, Mexico. They're all doing it. That's why it's a game of relativity here. Best looking girl at the dance. Cleanest shirt in the hamper. That's all it is. It's all relative, but it's all going to come crashing down. Yesterday's title was a total collapse. I'm telling you, there's going to be other podcasts with that same title, Total Collapse Part 2, 3, Infinitum. That's what it's going to be. And what the government is doing now, what the Federal Reserve is doing now, is all but guaranteeing that what would have been a severe recession is now going to turn into a depression. Because this is exactly what they did 1920s, 1930s. Late 1920s stock market crash, that would have been a severe recession. Federal government comes in thinking they have to save the day, they have to do XYZ, prolongs it, turns a severe recession into the Great Depression. Well, it's on overdrive now. The world is much more interconnected. There's multitudes of more debt globally, especially here in the United States. So this could very well be, as we have been saying, could turn into the greatest depression. I take no pleasure in saying this, but I see this not just as a possibility, but as a probability. And again, nobody seems to care. By the time the people wake up to the fact that there is a financial and economic coup d'etat underway, it's going to be too late. It's going to be too late. The dominoes have started to fall. Another podcast, The Domino Effect. What about the other podcast, A Death by 1,000 Cuts? All of it coming together. We have been talking about this since this website, since the Capital News has been online. The day of reckoning was coming. It happened to take a global pandemic to prick the everything bubble, but that is what we are in the midst right now. U.S. durable good orders fall the most since 2014. New orders for U.S. manufactured durable goods plunged 14.4% month over month in March, worse than market forecasts of an 11.9% drop, and the most since August of 2014. Demand for transportation equipment sank 41%, which is, of course, in agreement with the Cass Freight Index, mainly due to a 296% drop in orders for non-defense aircraft and parts. Well, there you have it for Boeing and the airlines. And, of course, Boeing is back in the news because now they are pulling back production for their 787 Dreamliner. On the positive note, core capital good orders, which exclude aircraft and military hardware, rose 0.1%. German business climate weakest on record. The IFO Business Climate Indicator for Germany dropped to 74.3 in April, the lowest on record from a downwardly revised 85.9 in the previous month and below market forecasts. U.S. consumer sentiment revised higher, but wait, the University of Michigan's consumer sentiment for the U.S. was revised higher to 71.8 in April from a preliminary of 71. Still, it remains the lowest reading since December of 2011. So, despite all of this fantastic news, sarcasm, obviously, how did the stock markets do? And of course, yesterday we got an additional 4.4 million Americans filing for unemployment in the prior week. Markets don't give a damn. They don't care. Taking this number now of Americans over the past 5 weeks filing for unemployment insurance to 26.5 million. Dow Jones up 1%. S&P 500 up 1.4%. NASDAQ 100 up 1.7%. Markets don't care. Bad news is excellent news. Means the Federal Reserve is going to keep printing money. Maybe we're going to have a balance sheet of 10 trillion, 11, 12, 13, 14 trillion dollars before you know it. A national debt at 24.5 trillion. We are adding trillions of dollars to our national debt on a monthly basis. This is ridiculous. Absolutely ridiculous. A deficit that is over 2 trillion right now, expected to be 3.8. It will be more than 3.8 when all is said and done. And we're just getting started. This is just the tip of the iceberg. Phase 3 was passed, a $484 billion monstrosity, continuing with all of these bailouts and quote-unquote stimulus packages. They're already ready to work on phase number 4. How much is that going to be? Who has the money? Nobody. Uncle Sam's broke. The states are broke. Americans are broke. The Federal Reserve doesn't have the money, but they can print it. Does that sound like a solid foundation to you? Does that sound like free market capitalism to you? Does that sound like a constitutional republic, or does that sound more like a banana republic? I think we all know the answer. And nobody cares. Nobody cares. So that's the nationalization aspect of things. The airlines, the energy sector, hospitality, the list goes on and on and on. And it's going to get worse. Again, the Federal Reserve's balance sheet standing at about 6.6 trillion and counting. Most of it is purchasing U.S. Treasuries and mortgage-backed securities. But wait, they will start buying a lot of those investment-grade bonds, those junk bonds, commercial mortgage-backed securities, commercial paper, you name it, they're going to buy it. When are they going to start buying stocks? Well, I think through a middleman called BlackRock, they're already doing so. That's why we've seen these stock market indexes just go through the roof. Go through the roof since they've hit their bottom at the end of March. I mean, just a huge, quote-unquote, V-shaped recovery. Not in the economy, not even close. We're just getting started with what's taking place in the economy. But in the stock market, how much longer is this going to be sustained? Or are we in a completely new paradigm? Completely disjointed and decoupled from the economy. This is just a central banker's paradise. That's all it is. Print money. We don't care about earnings. We don't care about revenue. We don't care about people dying, getting sick, healthcare systems being overrun. We do not care. We do not care about the United Nations predicting famine, multiple famines this year, and most likely going to continue into next year as well. We don't care about any type of deflationary pressures. We don't care about any type of inflationary pressures. We don't care about any type of hyperinflationary pressures. As long as the Federal Reserve is printing money in conjunction with the ECB, the Bank of England, the BOJ, you name it, we don't care. We don't care. I think an asteroid could hit this planet, wipe us all out, and the Dow, the S&P, and the NASDAQ would rally. Doesn't matter. This is complete insanity. These are no markets whatsoever. Anybody who ever studied economics, finance, investments, any of that, either formally at school or self-taught, you got to throw the books out the window. In this type of environment, it's just ridiculous. Now, I do obviously think and still believe that market forces will overwhelm all of this nonsense, just like we witnessed a few short weeks ago. Because despite the market melt-up that we were experiencing since September of 2019, market forces said, nah, can't do it anymore, and we saw that rapid collapse of almost 40% over the course of a few weeks. Now, with the federal government and the Federal Reserve putting the pedal to the metal, who's to say that we're not going to see another massive decline in the not-too-distant future? Right? It's in the realm of possibilities. It's also in the realm of possibilities that this rally continues, because they were able to have a rally from September of last year up until the end of February. Again, completely disjointed and decoupled from the underlying data of the economy, not just in the United States, but globally. But they were able to have that type of a melt-up for 5 months. For 5 months. Completely disconnected. They are doing the same thing again. And this time, nobody's working. At least last time, people were working. Nobody's working now. How are companies going to make money? Well, we're just going to print it. And the government, they're just going to bail you out. They're just going to buy you. Have some sort of equity stake. You understand why I call for a peaceful revolution? Because this is the two-party system, which is really one. They've abandoned you. You don't owe them anything. Leave them. Maybe, just maybe, they will start to wake up when they see how many people have left their respective parties and became libertarians or constitutionalists or independents or unaffiliated. Or as I like to say here, join the Mickey Mouse Club, because that's better than these jokers. Do yourself and the country a huge favor and leave them, please, immediately. Please. Tell your friends, tell your family, everybody. Leave the parties. It's a wrestling match. That's all it is. That's all it is. It's a pay-per-view show. And you happen to tune in to which side you like. You want CNN, you got it. MSNBC, you got it. Fox News, you got it. They got a flavor for everybody. And you're buying into it hook, line, and sinker. Wake up. Wake up. You want to talk about something else? Before we start talking about the negative rates and getting back to the Fed's balance sheet a little bit. This has to do with food price inflation. Again, the United Nations is predicting multiple famines, perhaps multiple famines this year. We talked earlier this week about farmers destroying $1 million worth of lettuce, not because it's been picked and it was spoiled rotten on a shelf somewhere. No, it was still in the ground, and the farmers drove tractors over it, destroying it. Meanwhile, we have famines. Meanwhile, we have food shortages. Fantastic. Well, let's add this to the mix. I'm sure many of you have now seen that there are many meat processing plants in this country that are shutting down. Well, this is going to have ramifications as well, because now we are starting to see some pig farmers up in Canada not taking their pigs to slaughter. They are now euthanizing them. They're just killing them, and they're burying them. That's it. People are starving to death. This is a food source, but because the slaughterhouses, the food processing plants, are shut down, well, I guess they can't afford to keep these pigs alive until they turn back on. I guess the cost must be too high to maintain them. Get this. There are farms in Minnesota that are only a few weeks perhaps behind doing the same thing that these Canadian farmers have done, to the tune of about 200,000 pigs could be euthanized and buried. So we got people starving to death. We have food shortages. We're going to have more food shortages because of all of these policies and because of what's taking place. You ready? Have we not been telling you this for weeks, if not months, that this was coming? Because people got to eat, okay? You don't need a new iPhone. You don't need a new gadget or gizmo. You don't need to go to the movies and do a whole host of other things. You get what I'm saying here? So the price of items and services can go down. Because if you're going to start spending a larger share of your income on food, well, what do you think everybody else is going to be doing too? The same thing, which is going to put a huge amount of upward pressure on the price of food. Like we've been saying here, you can have falling prices in some areas and rising prices in others. It depends on the good, on the service, and it also depends on a little thing called the dynamics of supply and demand. You have the global economy shut down. You have borders shut down. You have, before COVID-19, you have had many countries the world over becoming more nationalistic, becoming more frightened or agitated of foreign immigration. This is only going to continue at a faster rate following any type of quote-unquote opening up of the economies. People are starving to death. where food comes from, if food is grown in some country, look out. They might say we're not going to export it. You want bananas? You're not going to get them because they're not grown here. You want grapes? Nah, not going to get too many of those either because most of those aren't grown here either. Or whatever the crop may be. Because those people are going to say, nah, well, we grow them here. Our people are starving. We're just going to keep them and at least feed our people too. Be on the lookout for this over the coming months, in a couple years perhaps. This is not going to be a pretty picture. Global protests, if we've been staying here for months, are not transitory. History in the making. If things were bad before COVID-19, what do you think is going to happen after? You think these people are just going to say, oh, well, everything's better now? I don't think so. I don't think so. And again, we have yet to see any major bankruptcy, any major failure of corporations, of banks, even of countries themselves. Again, I am still flabbergasted and amazed that Hong Kong has not completely collapsed, which will have huge ramifications throughout the entire global economy. The real estate market in Australia, the real estate market in Canada, the real estate market once again here in the United States. Again, that top-down, bottom-up squeeze that we have been discussing here for well over a year. Commercial real estate, luxury, high-end real estate, and now with 26.5 million Americans, how many of them are now unable to pay their mortgage? What do you think is going to happen? Because there is no such thing as pent-up demand. It is not going to take place. A few minutes of simple, logical thinking will tell you otherwise. The president is a cheerleader for the country. Okay, you can applaud him for that, but he also needs to be a leader, and he also needs to step up to the plate and tell the American people the truth. And there is no pent-up demand. Social distancing, we've talked about the surveys yesterday about people's behavior already. It's already changing. People are not going to be eager to jump into the deep end of the pool. I mean, think about it. If you go to a restaurant, restaurants get busy, especially on the weekends. What do most people do? Well, you ask the hostess, how long of a wait? She tells you, it's going to be about 25, 30 minutes. You go back to your party. She said 25, 30 minutes. You want to wait or don't you? Yeah, we'll wait. We really like this place. We got here early enough. We're good. Well, what do you do when you wait? Where do they put you? Is that social distancing? I don't think so. You're all crammed in on a vestibule and a bench in an area away from everybody else, right? Until your name is called, your thing buzzes, whatever you got. You think that's going to be a practice that is just going to go right back to the normal? I don't think so. How many people are going to be comfortable standing around a whole bunch of strangers that they don't know? Right? Before, no big deal. No pandemic, didn't think about it. Now, everybody's concerned about social distancing, a pandemic, getting sick, getting somebody else sick. You think they're going to wait? You say, we'll see you later. And what happens if those restaurants have to cut down on the number of tables that they have in their establishment? Well, now you're going to have to wait even longer. Not good. Not good. Do you think about these things? I mean, I'm going to have to do a podcast, and I'm gladly going to do it, sort of drawing the connections, which we've done, but I'm really going to go through it with a fine-tooth comb to really understand all of the layers of the supply chain and how many touch points there are from field to grocer to your refrigerator, from an iron ore mine to a processing plant, the transportation, to whatever production facility it ends up in, into your vehicle, wherever it is. A whole host of things. The whole supply chain is affected. Behavioral changes are coming. They're already taking place. How many of you have seen people driving down the street in their car, windows up, with a mask on? I've seen it. In their car, windows up, with a mask on. And you think all these people are just going to get ready to jump in to the deep end because the president or some governor says we're open for business? I don't think so, ladies and gentlemen. And when you understand that thought experiment of understanding all of those intricate layers that make up an economy, it is not going to come roaring back. This is a direct result of years of flawed policies. This is a direct result of debts. We know what debt is here at the Capital News. It's pulling future consumption and production forward to today, well, we've done that in spades. We've done that in spades. We've probably pulled a good 10 years forward. So now we're going to have to pay the price of 10 years, if not longer, of slow, anemic growth. There you have your depression. Now, on the negative rate side of things, I was thinking today, we already have them. Of course, we have them on a real basis, right? You have the nominal rate of 0 to 0.25%, and then you would subtract whatever inflation is, about 2%. And of course, now that's going to take you to a negative real interest rate. But if you think about it, through previous podcasts going back months, when we were talking about how the Federal Reserve is likely going to, of course, cut interest rates again, the Federal Reserve even had some interesting data and research put out there, which we happen to agree with, and we cited it here on multiple occasions, that when the Federal Reserve was on autopilot, attempting to quote-unquote normalize their balance sheet by hiking interest rates and taking money off of their balance sheet, as opposed to adding it on, which is what they're doing now, so, well, every so often, every 10, 20, 40, $50 billion equates to a certain interest rate hike. So it was sort of a double whammy. They're increasing interest rates at the time, and they're also allowing their balance sheet to run off. So it was a de facto interest rate hike as well, from the balance sheet standpoint. So logic would tell us the same would be true in reverse. So if they're cutting interest rates, clearly that's a cut in interest rates. But if they're adding to their balance sheet, well, that too must also be akin to a de facto interest rate cut. And again, last year we said be on the lookout for how the Federal Reserve responds. Are they just going to say we're done hiking interest rates? Or were they also going to say we're done with the normalization of our balance sheet? We're done with the runoff. And they were done with the runoff. And that's when we knew that they too, the Federal Reserve, the Federal Open Market Committee, believed some of their own research in that regard. That pulling back on the balance sheet was akin to a rate hike as well. So they're not going to say, well, we're going to stop cutting or stop hiking and then allow for a de facto hike to take place. It wouldn't have made any sense. That was the whole point. But now, with the Federal Reserve cutting rates, doing it in 2 consecutive emergency meetings, taking us back to the zero bound, and now with a huge quantitative easing program with no end in sight, $2 trillion over the past month, don't you think that would amount to a de facto rate cut as well, and probably quite a few of them? So we are at negative interest rates. The president has gotten his wish. The system is collapsing. The financial systems in Japan and Europe have been collapsing because of negative interest rates in conjunction with all of the other flawed policies that they have enacted as well. Look at the Japanese markets, the Nikkei 225. Look at it from a historical perspective. Look at it how it peaked in the late 80s, early 90s, collapsed. It has not come close to regaining those levels. Look at European shares, same thing, especially on the financial sectors. That is likely to follow here in the United States because we are doing the same damn thing. And somehow we are expecting a different result. I don't think so. The only thing that's going to be different this time is that it's going to bring everybody down. Because Japan's going to come down again, Europe's going to come down again, China's going to come down again, India, the UK, Australia, Canada, Mexico's already in recession, and the United States as well. Negative rates. And just wait till they start coming after your bank accounts. I hope that's not true, but I wouldn't be surprised. We've seen this over in Europe in a couple instances. Be on the lookout for it. Because that's what this is. That's what inflation is. That's what hyperinflation is. We talked about that a little bit yesterday as far as how these debts could possibly be paid off. Well, they're not going to be paid off, except through hyperinflation. That's the only way it's going to happen. You default, you're opening a huge can of worms. You default, who's going to want your debt? Nobody. Because you're somebody who's defaulted. That's Donald Trump. That's what he's done on multiple occasions. That's why it's very difficult for him to find lenders. Now, I digress. But if you do that, if we do that, if we default outright and say, well, we're just not going to pay you, nobody else is going to come in and buy the debt. Yields will spike. That will tear down the entire economy. It'll shut it all down. We couldn't even take 2.25%, 2.5% a year and a half ago. Wall Street threw a hissy fit. The president threw a hissy fit. Couldn't even tolerate that. So much for a booming economy. I hope you understand what we're in the midst of. It ain't pretty, and it's only the tip of the iceberg. Today's Friday. Enjoy your weekend, everybody. If there's some excitement over the weekend, perhaps I'll do a week ahead segment. If not, you'll catch me back here sometime next week, hopefully on Monday. Enjoy your weekend. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.